Rates jumped again this week, and no, it was not the Fed. This week, we're going to cover on what is really driving the market and what you need to know as a buyer or seller. So as I opened, unfortunately, rates, yes, again, up from last week, 6.62 to be exact, from last week, 6.43. And no, it was not economic news driven. It was driven around geopolitical forces and the all important oil. On rewinding on this week, as we started the week off, there's talks of a ceasefire. Monday, Tuesday, markets were loving it. We saw oil starting to come down in cost, which in turn was driving mortgage pricing down. Well, fast forward Wednesday, Thursday, we saw ceasefire talks evaporate, more strikes, oil go higher. Followed behind was mortgage-backed security pricing. And what's becoming abundant, or apparent, I should say, through this cycle is that the market is responding in real time. Any news headline, news wire that appears is digested from the market, and we're seeing real impact on both up or down in real time. And again, it just resonates that aspect of extreme volatility, which is creating a tremendous amount of pressure and concern for potential buyers and sellers. And here that brings into question of, hey, what happens with the Fed? So why we're seeing the bond market respond in this manner is with oil trading at the levels it's trading, it brings into concern of, hey, what forward inflation can we expect? In turn, that starts to bring into question how many times or what velocity the Fed will be cutting as we progress further through this year. But one thing remains incredibly abundant through all of this: opportunity. As we saw leading into the beginning of March, rates coming into the high fives, buyer activity was at an all-time high. And we saw multiple counters in almost every instance. And now people are incredibly payment sensitive and in turn taking a step back. So something that we can absolutely lean on to our clients in this moment is, hey, if you missed your opportunity earlier this year or earlier this month with rates taking some people out of the market, this may be your time to pounce. As we've seen inventory continue to grow, buyer demand is still there, but no, they are payment sensitive. So any moves like we're seeing over the past couple of weeks can make individuals pause and reevaluate their position forward. So again, if you're entering into this market or wanting to find guidance, know that we are always here to provide support and guidance to ensure that you're set up for success. As always, let's make it a fantastic Friday and an even greater weekend.